Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. And I've put together the top 7 key market drivers I look at when analyzing a real estate market. Go to sethferguson.org to download your free copy. Our guest today has been investing in real estate since 2005 and has experience in college rentals, vacation rentals, commercial, raw land, and lending, in addition to a number of separate businesses. Vince Pecoraro joins us today. Vince, welcome to Purchase to Profits. It's great to have you on the show.
Great to be here, Seth. Thanks for inviting me.
Yeah, really looking forward to this. So let's kick things off and talk about your real estate goals right now. Where are you looking to go in real estate?
So the way I look at real estate is that it should empower your personal life in some way. So what are your goals and aspirations are in your personal life? It should be the fuel that kind of feeds that fire. Right now, I have a family, a growing family, 3 kids, wife, they're young. So I have structured my real estate investing to support that lifestyle. One with the vacation properties. I started buying houses where I wanted to go on vacation at, so I could have free vacations and then also have some residual income that comes from it. I also started buying commercial buildings, daycare buildings, and I started a daycare business because I have kids and I don't want to pay for daycare. So it just kind of naturally fit into the life that I'm living right now. So what I want real estate to do for me in the future is just to continue to power down whatever aspect of my life that I'm in. And as I get older and my kids mature and go off to college, I'm sure I'll get back, more heavily into the college real estate game and so on and so forth. But always looking at real estate as that tool to help multiply my ability to succeed in whatever area of life I'm in.
Yeah, and we can see one of the little guys behind you on the picture wall there.
Oh yeah,
yeah. And so, did you? So you started investing in 2005. Were your kids around then, or did you get started before the kids?
So yeah, much before the kids. I was 19 years old with the first real estate investment, and we went forth just to buy some college rentals. I was in college at the time. I saw there's an opportunity near my university to go and pull this off. And I live in Dayton, Ohio. The homes were super, super cheap. In 2005, we're pre-bubble, but bubbles didn't matter in Dayton, Ohio at that point. So I think the first house I bought, this is with no credit, right? I had a $28,000 purchase price. There's some owner financing that was involved just to get my foot in the door. It was a duplex that was lived in by the same guy since he was 16 years old. He was in his 60s. And then the upstairs was vacant. And the landlord was responsible for all the utilities, and the downstairs guy was only paying $300 a month in rent. So it was a terrible deal, but I got into it. I ended up when I knocked on the door as this 19-year-old and told this guy that had been living there his whole life, I'm the new owner and that I had to raise his rent. He actually started crying, and it was like, oh my gosh, no, I did not intend for that to be the case. And I told him where I need to get his rent to, and he was like, not possible. I cannot afford it. I've lived here my whole life. So then I just took a step back, tried to put myself in his shoes, and was like, no, let's think about a way to incrementally move this person up to where it makes sense for the property to be at. And then for the upstairs portion, it was pretty rough. I lived there for a small period of time, maybe 2 months. I was like, I cannot live here anymore. Let me find someone else that can help empower what I'm doing at the time. So I brought somebody in, I charged them $200 a month rent, and then they traded 2 days of work a week. And they worked for me on the weekends to help rehab other properties I was planning on buying.
Yeah.
This property was the first one, and then that became my labor force. So for a kid with no money, I was able to get someone to sell me a house. I was able to get labor, utilizing the resource that I had of lodging, and it all worked out really well. In the end, I was able to scale from that first house to 11 of these college rentals by the time I graduated, in 3.5 years from when I bought the first one. So it was a cool first way to get into the real estate business, but at the same time, it was also just a lesson in when your back's against the wall, you got to figure it out.
Yeah.
There's always a way. There's always a way. You just got to put your mind to it.
Yeah, for sure. I know with myself, when my son came along, my whole shift in my whole thoughts about real estate shifted because now I went on overdrive. Did you experience anything, when your first child came along? How did that impact your real estate investing?
Well, so I thought back about to my parents and grandparents. They were involved in real estate, and that's where I got my first taste. And I would go out and sweep the parking lot with my dad, and my grandfather of their commercial buildings on Daytona Beach, and it was just this lesson like, hey, someone owns every single one of these buildings all around you. And someone's got to take care of them. And all the people that drove by in the street probably thought we were just like the day laborers, that were coming to sweep the parking lot, but we were actually the ones collecting the checks. And I thought that was pretty cool. I remember being probably like 10 years old when they took me to the first closing, and I just sat there, didn't really know what was going on, saw some checks change hands, some people signing, and we went out to dinner afterwards. This is a pretty good deal. I got to hang out with my dad and grandfather, and I got to go out and have a meal. So that kind of got me initially interested in real estate. And, when my kid came along, I just, my daughter, I really wanted to expose her to the same stuff. So she was actually born in the middle of my wife and I rehabbing our house. It was a short sale that we had purchased, and we were getting it fixed up in historic district. So she got to, from the beginnings of birth, to experience this. But definitely something changed in my wife at the time, like where she was pretty cool with having tools lay around and rehab stuff go on at pretty much all hours of the night. When the baby came, that was not allowed anymore. So it definitely got me to like focus my energy and like try to figure out, all right, I gotta get this project done. And then is this the kind of business I want to be in, from like a rehabbing older homes, low into the market kind of perspective, or do I want to transition to something, much higher end, easier to deal with, less time demands on myself. My wife and I waited a few years after we were married to have kids, but we finally started to have a little money. The real estate investments that I made early on had started to pay off, where I was able to sell some of the properties, realize some of the equity gains that we had made, and then ultimately move into a place where it made sense. We could afford to actually hire out some of these tasks that took up a lot of my time, so I could spend it with my children.
Yeah, for sure. And you mentioned you've acquired a number of daycares, right? You have a couple of them.
So right now, I have one. It's a little over 6,000 square foot building. I'm in the process of closing on two more.
Nice.
And I'm using a unique, I think it's a unique buying strategy for these. It's called a depositor's foreclosure. In a county that has a lot of properties where people aren't paying their taxes. Normally, the county will take those properties and bundle them up and sell them for tax liens to big institutional investors. Well, before they go through that process, if there's an individual in the community that says, you know what, I'm interested in that property and they haven't paid their taxes, the county will actually allow you to go in and put a small deposit against that property to force the foreclosure to go into place. So be it a $2,000 for a residential or $3,000 deposit. That's it. Now, once the deposit's made, the county will go and start the notification process, the court filings to force the foreclosure. It takes between 6 months and a year for it to fully work itself through the process. But it's interesting. After the first auction, it goes up for whatever the taxes are owed. No one bids on it because it owes way too much in taxes. It goes to the second auction. Same thing, goes up for what the taxes are owed. No one bids on it. The third auction, and these are all 1 month apart, the third auction, it goes up for what your deposit, you're the minimum bid. And in a city like Dayton, sometimes you can pick it up for $3,000. So I anticipate to spend more than that on both of these properties, but not too much more. Maybe 20,000, maybe 70,000. The one I'm looking at that is that one comes to bid in October. That one I think I could pick up for under 30,000 for sure. And then, but it's got $260,000 tax valuation. So I mean that's a big swing. Now these properties have sat vacant for such a long time that there's issues with them, right? They've been through a winter without the right heating and cooling systems, in the summertime as well. So there's warped wood, there's probably bursted pipes. So you have some fixing to do, but there's still tremendous value you can unlock. Yeah. So that's what that's why I'm scaling the daycare. But so far it's successful. We got over 50 kids at the first daycare. And the reason I bought the building is next to property that I developed and built a house on. It's like, well, I don't want something else to go in over there. Might as well buy it and then turn it into a daycare. Maybe part of the rent could be that I get free childcare.
Yeah.
And that worked for a while. And there's some unfortunate things that happened with the owner of the business. Her husband passed away, and I ultimately had to step in and take over that business, which I never intended to be a daycare owner. invest in what you know. And I didn't know anything about childcare other than like, it's hard. So, so it's not something I wanted to get into, but fate forced my hand and we figured it out, right? There's a way and we've been successful with it, but now it's what started out as a real estate play and it's going to continue to grow as a big real estate play. I'm going to pick up these things of value, and I don't think daycare is the only industry like this, but it's certainly one that has been like glaring at me. There's a lot of people that are really good with kids, that are really, passionate about childcare, but have no clue how to run a business, or balance a checkbook for that matter. So there's so many of these properties, especially in this like special use case, classification of a daycare building, like that just fall by the wayside and they don't pay their taxes. You can pick them up super cheap. Churches fall in that same bucket as well. If you can find other uses for churches, you can pick up some good churches out of this process. So that's the daycare business. It's coming along nicely. It's a little unsure at the beginning. I had a big nut to crack with payroll and not enough revenue, but now we turned the corner finally.
Yeah. Oh, that sounds really exciting. We'll have to have you back on in a couple of years once you're the daycare king.
Yes. Yeah. We'll see how that goes. My wife's giving me enough latitude to try out these two and see how the auctions go. But right now it's been a very interesting business. It's rewarding to help the families, but it's the first business where I've directly employed, other people on like a regular, hey, here's your paycheck every 2 week kind of deal.
Yeah.
Most with real estate, right? I'm just 1099ing them or as needed basis. So it's rewarding. It's also a little bit more stressful, but definitely turn the corner now.
For sure. Are you looking to acquire other daycare businesses to put them in your buildings, or for these ones, are you just looking to lease them out?
So now that I have the daycare, I'm going to just scale myself into these other buildings. But leasing them out is always a fallback plan. If for some reason I realize, hey, I don't need to play in this space anymore. Again, I didn't intend to own a daycare business, so I want to scale it to large enough size where I may be an attractive option for a buyout from another big daycare provider. There's a whole bunch of branded daycares in the high-end space, and I think I'm taking my market strategy to a little bit like middle of the road to lower end clientele from an income perspective. And I know there's going to be a need for these guys that have expanded in the suburbs to continue their growth, but there's no more suburbs to expand into. So I'm thinking there's a possibility where maybe I build up a nice mid-tier to low-end income business, and then I just become a separate brand of theirs, or who knows?
Yeah,
that's kind of one of the thoughts, the leading thoughts that we have right now.
Yeah, no, that's really cool. What would you say with your real estate business now in general? What would you say is your number one challenge?
Oh my goodness. So it depends. If I'm looking at it from like my vacation rental property business that I entered into with a group of friends, like-minded people. We all had a commonality with work. So we had that shared paycheck background. I worked for the Air Force, and so we had a nice strong background, strong jobs, quality people by and large. And we wanted to go and put some money into a pot and buy a vacation property. One, so we would stay connected, but two, so we would be able to start this business and see where we could grow it. What happened when we tried to go get a loan for this, despite all having impeccable credit, 6-figure salaries, like the banks just didn't know how to handle it, and it was super frustrating. It's like, man, this should be a slam dunk. I mean, half these people don't even have any debt at all. And you're going to have 8 people with solid credit sign on to a loan. Like, this should be super, super easy. But because the first property we bought was residential, beachfront property in Florida, there was just the banks were unsure on what to do with it. And they normally repackage all their loans and sell them off. So this just kind of broke the mold, even though pretty safe bet from where I was sitting, like, why don't you want to take this on? We finally found a bank in Chicago that played ball with us, and we're able to pull the trigger. But proper financing, like just common sense financing, is what I find is lacking in the real estate market right now. There's plenty of standard conforming loans that you can go get. Money's easier than it was a few years ago, but just for the common sense business deal, it's really hard to get lenders to step up and say, I'm going to keep this loan on my books. So that if I give you my biggest problem, that's where it's at.
Yeah, no, and that's the totally fair statement. I agree 100%. So as you're building your portfolio, you've got experience in a lot of different niches or niches. What sort of routines and rituals have you developed to help make you successful?
Well, it's really just staying diligent and curious. There's always opportunities in the market, right? When I'm driving by a building in my town and it's got grass coming out of the sidewalks and maybe a broken window somewhere, I'm like, wonder who owns that? What can we do with that building? Same thing with the vacation properties. When I first started thinking about it, what communities are struggling or just gone through a hard time, where they could use some investment? The Gulf Coast is where we bought our first property. They had just gone through a whole bunch of different disasters, from hurricanes to oil spills to all sorts of either man-made or just natural disasters in the area. There's an opportunity here. Let's look for opportunity where there's adversity, and provide some of that capital when you go in. So staying curious has led me to these different deals I never would have imagined, to start out with. But it's like, okay, what would it take to pull this off? Let's do a little bit of research. Let's talk to a few people. Let's line up our financing. And all of a sudden you realize that, oh, this is actually a decent business. I mean, it's maybe not a, home run every time, but like, hey, if you can eke out 10% return on something, you're not doing too bad.
Yeah. Oh, 100%. And how do you, because like you've got your daycare business, then you've got your vacation rentals. How do you make all of that work inside your head? Like, do you just say, okay, well, today I'm focusing just on this asset? Or how do you divide things up so you don't, get all mangled inside your brain?
That's a good question. I don't actually know that I have a formulaic approach to doing that, but I definitely have separate emails for everything, and I keep them open on my computer at all times, and I track that way. But it all comes to a single point on my cell phone. I run pretty much everything through my cell phone. I have a lot of Slack channels that I operate in, which is a group messaging app, which I'm sure you're familiar with. But it's that's been a very helpful tool for managing each business, especially when there's other parties involved. I'm a member of owner of a brewery as well. It's like just keeping things between each business. Sometimes it's really, I'm just there for capital, and I'm not going to have any say in the day-to-day operations. Other things I'm much more involved in, like vacation rentals. I put together a lot of the loan deals that we're looking for. I structure a lot of the front end, purchase deals we put together. That's because I have the experience, whereas some of my friends that I entered into this business with just don't have the real estate background, and they're much more passive. So it's setting up the construct and understanding where how they're gonna interact in the business through those partnership agreements is really important. You had John Linhart on a few weeks ago, and he's my cousin of mine, but also a partner in college rental business with me. So and there we have our clear lines, what we're going to work on and who's going to operate. And it all seems to work out, but it can be chaotic. And when I tell other people about it, like, man, when do you sleep? But we figure it out, find a way, make a way.
Yeah, for sure. Well, let's talk about a Keystone deal. So a deal that made a big impact on you and your business. Is there one that stands out?
Yeah. So each business is so different, but I'll talk about the college or the vacation rentals, because there's lots of ways to go about putting a deal in place. But when you're investing with a group of friends, and getting them to the table where you're actually willing to pull the trigger on that first investment is hard and challenging, and you don't really know what to expect. So I went into this deal with a group of people that I had spent about 10 months with. They're geographically separated all over the country, but we went through this program together, where we got to know each other pretty well and travel all over the world together for work. And we developed trust amongst each other. I asked who would want to be there. There's actually a lot more people in the group than just the 8 of us. But I asked everyone in the group, hey, anyone interested in doing a real estate deal, let me know and shoot me a message. So turned out to be 7 people that were interested. I made the 8th. And I was like, all right, well, if we want to buy $1 million house, we probably need to come up with around $200,000 or so to make this deal work. So I probably can't get all 8 people to throw in. Maybe I get about half of them. So I set the buy-in at $50,000. We all throw money in a pot and we'll make it a deal. And I figured the best way to go close this deal is to go take them to the location that I thought about, we should buy a property in, and let them all experience it. We'll just do like a vacation there together. So I booked the Airbnb, brought them all down there, and this is Navarre, Florida, down in the Panhandle, and it all worked out. They brought their spouses, and I thought I'd get about 50% to close, and 100% of the group was like, "Yeah, I'll give you 50 grand. Let's try this out." When we originally went into it, we were going to go buy some land down there and build, and then maybe build 2 houses on that land. And then we started, looking at it, talking about it together in that space, like in the market we wanted to be in. And we realized it just didn't make sense. Go buy an existing property, start earning the revenue from it right away. And that deal was really interesting because it was so expensive compared to most other deals that we would ever look at as beachfront property. We spent like $950,000 on the property, but we were able to go get the loan, close the deal. The property does right around $100,000 a year in revenue, so it's a good property. But we didn't buy it with the expectation of making a ton of money off of the revenue model, right? Because we got to pay property managers, there's costs. We're going to use it, so we're going to chew up some of our own profits by utilizing the property. We went into it as an equity play, and everyone had that same understanding. Hey, there's a good equity play here. That part of the country has a unique situation where it's leasehold versus freehold property, and they're about to change that. There's some bills going through Congress right now to just convert it to freehold. And while we don't have any inside information, they just built a Marriott down there, and I think a Hilton's planned to be built down there. These corporations really like the freehold business. They don't like leasehold, whereas you and I, we're dead in 99 years anyway. So having a long-term lease on a property isn't that big of a deal. But for these businesses, they go on into perpetuity. So the fact that they're investing in this community told us that there's pretty good likelihood that the law was going to change and they were going to actually deed us all the property. I think that's going to still occur. It hasn't happened yet, but we saw a dramatic run up in price when other people started having the same thoughts, and that was our equity play. Nice. Between that, there's a back in, I don't know, the 50s or 60s, there was the Army Corps of Engineers built a pass. So Navarre sits in between Pensacola and Destin, and it's on this barrier island called Santa Rosa Island. And there's actually some of the best fishing in all the country is right off the coast of Navarre, because it's really close to where the continental shelf drops off. So the water gets really deep, really close to shore, so you can get bigger game fish. So the Army had to build a pass there, and it got filled in 4 months after it was built by a hurricane, and they never reopened it. So someone just built a massive slip on the bay side, right where you would reopen the pass at. I don't have any inside information, but I'm looking at this saying, I think they're going to reopen the pass. And the moment that does, commercial shipping and commercial fishing really will dramatically raise prices. And I mean, if you look at what Destin was like 30 years ago, it was very similar to how Navarre is now. I'm not saying it's going to get to Destin size or scale, but it doesn't need to make a ton of money.
Yeah.
We've already got an offer. I bought this house in 2017. We closed. We had someone come to us at 1.3 trying to buy it from us already. And they talked to the real estate professionals in that area, and they're like, we think it's going higher. You should hold off. And we really hadn't held it for long enough for where it made sense from a tax perspective to make that move. But yeah, it was an equity play. So just understanding, like, really the dollar amount doesn't matter as much. It's just, how many zeros you're putting behind it. Do you have a clear line of attack? You can definitely make more money on the bigger side from actual dollars. But like, I was making 30, 50, 100% returns on my really small deals. Well, the percentage doesn't matter as much when it's only $20,000. The bigger the deal, the better the higher likelihood there is you can have real dollar returns, even if those percentages are a little bit smaller.
Yeah.
It's okay. So that was just a good realization for me, and just being able to close the deal with all my friends, understanding that, hey, everyone's out there to go make money. You can put together a deal that makes sense for people. Like there's money to be had. So I don't need to worry about the banks as much. I can go out and raise my own capital if I need to. And just, it was very empowering.
Yeah. And I liked your sales approach. Just bring everybody down and give them the time of their life right in the location. That's amazing.
Yeah, definitely.
Yeah, the one other thing you brought up, which is so important when you're dealing with partnerships, is making sure everybody's on the same page. And you said that everybody was on the same page with it was an equity play, because I see that's where a lot of partnerships go off the rails, where people have different visions for the project, or they have different values in what they're looking to accomplish. So what sort of advice would you give to somebody if they are having those partnership discussions, and just to make sure everybody's on the same page?
For sure, yeah. You have to first start with trust, right, with your friends, your colleagues, and when you all sit down at the table to have that discussion, right, that initial seed money that you're supplying to the venture, it's really important for people to have an expectation of what's going to happen to that money. Am I going to be drawing, on the returns that come out of this business every year? That's like a big deal, especially when you're dealing with a group this size. And the way we structured it was everyone was an equal share. We're all friends. Doesn't matter. You're not going to make the most money on a real estate deal you ever could structuring something that way, but it's actually pretty simple once you have the understanding that we're not going to take any money off of this deal. The money's just going to go reinvest itself. And with that initial deal, we've already bought 2 other houses, looking at 2 more.
Nice.
So we'll have 5 houses here by maybe this time next year that we've closed on, all with that initial $50,000 investment. Haven't put any more money into it, and it was a common understanding. So no one's like itching to get their 50K back, right? They considered it spent. I'm working on another deal with another group of friends down in Daytona Beach, where I grew up, and it's based off this mastermind group that a friend of mine formed. And everyone wants to do some type of investing. They're not sure what, but real estate seems to be where we're headed. And varying levels of income. Some people are pretty wealthy in the group, others are just starting out their investing careers. But it's getting people to that place. And so we're having a lot of discussions now over calls and over Slack, like, hey, how much money do we all want to commit? And then do we understand, like, once it's committed, we have the money out there. Even if we're not like one person in the deal isn't like 100% in on a deal, like, is that okay? Or do we need to have 100% buy-in? We're putting together our decision structure now. And it's been a little painful. There's been some heated, discussions between some of the high school friends that this group is with. But at the end of the day, I think it's going to work out just fine. And everyone will end up making a little bit of money. And for the people that have a lot of real estate experience, it's going to be, I think, beneficial to see their friends kind of get the bug, like we've had most of our lives. And then for our friends that are just starting out and getting that taste, like, that's going to breed other deals in the future when they finally go out and seek something. They have a network now to reach back into for financing, to pitch ideas, and it's just that network effect that these businesses create, right? They force you to stay in touch with people that you would otherwise just maybe check in on them on Facebook or at the high school reunion or something. But no, now you actually have a reason to communicate, and they're in different circles. So it seems to work out pretty well. I'm really happy with how each one of these little groups is starting to form.
Yeah, no, that's really exciting. And you mentioned the heated conversations. I'd always rather have those discussions up front rather than have those surprises later on down the road.
Oh yeah, for sure. And I mean, as long as everyone keeps the perspective and finds a way to limit their liability, we'll create LLCs, we get the right tax structures involved, and understand, like, hey, if this is all that we have at risk, like, that's all you have at risk is a small bet. And be it $10,000 or $50,000, it's all relative, but you've conceptualized in your head, here's the bet I'm making in this one venture. All right, if it does great, maybe we lever up on that. If it flounders, okay, you move on, iterate, and try something new.
Yeah, for sure. So, since 2005, when you got into real estate, how has real estate investing impacted and changed your life?
Oh gosh, real estate has been the fuel that allows me to live the lifestyle that I want to live. I started investing so young that by the time most people are buying their first house, I was selling some houses for nice profits, and they acted like mini bank accounts, each one of those houses. And then all of a sudden, you get the cash and you can go lever up. So it's been tremendously impactful. My wife and I live in a beautiful house on 15 acres. It's we could never have afforded it with our government salaries. Because of real estate, we were able to go buy the land on the front end and then negotiate the terms. Like, I bought this land that we lived on owner finance deal, And then once I got it all paid off, then I was able to go and structure like having a company come in and build the house we wanted on this land. And I get to raise my family here. So, and they have total freedom to run around and play. I got an 18-hole disc golf course on the property. Like, it's just a lot of fun. I travel a lot for work, and I'm able to really enjoy myself when I'm traveling. Have the best steak or some of the best meals, because I'm not really too worried about the money aspect of things. When I go sit down at a restaurant, the menu price something on the menu doesn't really bother me as much as it would have at someone else at this stage in life. So real estate's empowered that level of thinking. It also helped me conceptualize money differently. Money is just a means to an end. And if I want more money, I can just go structure a deal to go make some more money. It's having that freedom of thought is, I think, something we should be teaching people at the middle school and high school levels. Like, if you want money, go get money. There's lots of ways to go get it. You are free to make any type of investment you want, any type of business deal, to go after that money. And real estate was just like proof. These houses were sitting idle that I started buying. They're crappy little houses in an old rundown historic district in Dayton. And I changed the use case of them to be called rental properties, and was able to make a tremendous amount of money from a cash flow perspective. But then also when I flipped them, coincidentally, to flippers for 3 times what I paid for them, like in many cases. It's like, man, there's so much money to be made out here. I'm also a real estate agent. So another thing that's like totally side business. I originally went in to become a real estate agent so that I could, get a discount on my transaction that I was going to do. But then I realized, okay, well, if I just do deals for my friends, which my network's pretty big now, this is actually really easy money. So I cleared like almost $20,000 on real estate deals last week that I literally showed people houses for, a couple of days. Like, it was not a tough deal. So overall, I don't know, it really worked out, and grateful that the real estate's empowered my life. I expect it to continue to do so. I'm not stopping investing in real estate. I have, like I was telling you, so many more deals in play now. And you get to a certain point where the deals just come to you. And it's not just on the buy side, some of it's on the loan side. I've done a great deal of financing now for other people getting in the real estate game, be it Hispanics that are, got kids that were born here, but maybe they don't have all the paperwork finalized yet. They don't play well in the banks, right? But they're hard workers. They want to get after it. I'm happy to loan people money at 10%. That's fine. And I'll work with you to get you the right paperwork so you can go and refinance your house properly. So I've done a few deals like that. With some of these flippers, they're just looking for cash flow. I'll go owner finance the houses that I've got paid off to them and take 10%, put balloon payments in place. Real estate's just been so empowering to be able to just feel free.
Yeah. And looking ahead 10 years from now, where do you see yourself in 10 years with real estate?
Oh boy. Well, I definitely see myself a little bit more involved in the commercial space. Now that I feel like we got the daycare nut cracked, I actually see a couple more of these daycare properties coming into the fold. But I expect to be able to travel for the seasons. So I have really bad allergies in the spring, and like, I set a goal for myself. When I make it, I know that I will never have to experience spring again. Let's go south of the equator or something. So that's a goal I've always had, and I expect my vacation rental businesses to kind of fill that void where I'll have properties I can just go travel to, and when I'm not there, they can be making money doing, renting stuff out or whatever. Another idea I've had is to buy commercial buildings in different cities that I really like spending time in, and just putting small apartments above them and kind of traveling around in retirement with my wife, wherever our kids end up, or who knows.
Yeah, I like it. I've never heard the allergy thing, but it makes total sense. I love it.
Yeah, definitely. I mean, it's gosh, the allergy thing in Dayton, we're like a valley. So I sneeze all the time here. I'm allergic to all the trees that are native here. Why do I live here? I don't know, but it's definitely something I know when I don't have to experience spring again, I get to travel for my own health. Like, that means we're doing something right.
Yeah, for sure. And with Dayton, I never even brought up the Dayton Gems, the IHL hockey team that used to be there.
Oh yeah, no, we got Dayton's a great city. People knock it a lot. We've gone through a lot of tragedy recently, but it's got a ton to offer. I mean, you're an hour from Cincinnati, an hour from Columbus, 2 hours from Indy, 3 hours from Cleveland, 2 hours from Toledo, Detroit area, 3 hours. These are all cities that have major sports teams, like not just like little tiny podunk cities. They are major teams, major cities, lots to do. And then Dayton gets to feed off of all of those. We have an international airport. It's super cheap to live here. If you want it to be cheap, if you want it to be expensive, you can find that too. But yeah. I was just in San Francisco last week. I was talking to my Uber driver. He lives 20 miles outside of San Francisco, which is like an hour commute into the city. And his rent for a 3-bedroom is like well over $4,000 a month. My mortgage payment on my house is $2,100 a month, and it's like 3 times the size of what he was renting. So it just doesn't add up. And I can get to San Francisco with one ticket.
Yeah.
So that's what I love about the Midwest. It's a great place to invest. I had this weird investing strategy where we picked our properties for the vacation rentals. Not only are they places I want to go, I looked at cities that had gone through, or regions that had gone through a tough time under the previous administration. They didn't have a lot of job growth, whatever. And then I saw the new administration come in. All these states went red. They went that direction. And I kind of feel like the president likes to look after his own in many cases. So like he's gone and lobbied for companies to go and put jobs in these different states. Well, if these people now have jobs, they can go take vacations. And I thought, well, this is logical. They haven't gone on vacation in a long time. They're going to want to spend money to go on vacation. So that's where we focused a lot of our investment, is based off this initial, like, the price sounds right. It's a theory. Maybe it's totally baseless, but I figure as the economy's improved and jobs have improved, all these properties are doing much more revenue than they were before I bought them. And that's a good news story, because now I can sell them for that much more if I wanted to, but also it's that much easier to crack our mortgage nut every month.
Oh, for sure. So Vince, if somebody's looking to get in touch with you, learn more about what you're doing, where can they find you?
So I try to stay off a lot of the socials, just because of for work and other reasons. But vincesellsdayton at gmail.com is one of my real estate emails I use. We have a couple websites if you're interested in looking at the vacation rentals, eldpllc.com. That'll get you to our different vacation rentals we have now. There's one in Daytona, one in Navarre, one in Tennessee. We're looking in the Hocking Hills area, Poconos. Going to do something a little bit more northern, maybe North Carolina on the beach. We're looking at a couple different regions for growth there. If you're looking for the daycare, victorumlearning.com. That's local for Dayton, but if there's any buyers out there looking to acquire an up-and-coming daycare, check us out. And then if you're interested in the brewery, the wanderinggriffin.com is also where our brewery's at. So yeah, that's where you can find me.
Yeah, no, love it. Well, just want to say thanks so much for taking the time. Really enjoyed our chat. You've got lots of interesting things on the go.
Yeah, definitely. Hey, I had a great time, Seth, and thanks for having me on.
Yeah, pleasure was all mine. And to you, our viewers, I wish you well on your journey from purchase to profits. See you next time.